In an era of just relentless information, being able to quickly grasp complex topics without feeling totally overwhelmed, that's a real advantage. Today, we're really digging into a truly compelling document, The Ultimate Investment Thesis for the Smarter Web Company, SWC, by Chris Millis.
Yeah, and what's really insightful about Millis's work here isn't just, how comprehensive it is, but how he actually distills a pretty sophisticated investment case. He presents this company that's sort of uniquely positioned, right, at the intersection of traditional digital services and this new frontier of Bitcoin treasury management. And he does it in a remarkably digestible way.
Absolutely. And our mission with this deep dive is, well, it's to extract the most important insights, maybe uncover some surprising facts, and ultimately help you, our listener, understand the core strategies, the opportunities, and yeah, the risks that Mellis outlines for the smarter web company. And here's a really crucial point for you right now. If you're watching this deep dive on YouTube, you can view and download the original document for free. Just use the link in the description. And if you happen to be on X, simply scroll to the highlights tab on Chris's profile. That's at Chris and Millis, spelled CHRISMMILLAS. And you'll find it right there. We really encourage you to follow along as we explore. So over the next few minutes, we'll navigate from, the smarter web company's core business ops right through to its ambitious Bitcoin strategy, the strength of its leadership, the financial mechanics behind it all, and those compelling arguments for why this company, well, why it might be poised for some significant growth. Okay, let's start by pulling back the curtain a bit on the smarter web company, starting with that high-level snapshot from Millis's one-pager. At its core, right, this is a UK-based web development and digital services company, but, and this is crucial, it has this additional identity, a Bitcoin treasury company. For anyone interested in tracking its market presence, you'll find it under the tickers SWC in the UK, TSWCF in the US, and 3M8 over in Germany, broadly categorized within software and financials.
Right. And behind that profile, the document introduces the key leadership team. You've got Andrew Webley, who's the founder and CEO. He brings quite a rich background, actually formerly head of online at Hargreaves Lansdowne. Then there's Jesse Myers, co-founder of OnRamp Bitcoin, who's acting as their Bitcoin strategy consultant. And Tyler Evans, serving as a non-executive director. Quite a lineup.
Yeah, it is. And Millis, he definitely doesn't shy away from highlighting the opportunities he sees. He points to it being founder-led, with significant insider ownership, and it establishing itself as the first and largest public Bitcoin treasury company in the UK. That's a big claim. He details this considerable runway for Bitcoin yield, which is basically the potential for pretty impressive returns from their Bitcoin holdings, and he underlines this high, almost desperate demand for Bitcoin exposure among UK investors. The thesis even suggests maybe potential to dominate the UK fixed income market.
Wow.
And beyond its Bitcoin pivot, it still maintains a strong core business with organic growth and active acquisition strategy, and importantly, significant backing from key Bitcoin figures like Tyler Evans and Jesse Myers themselves.
Of course, yeah. No investment thesis is really complete without a clear-eyed look at the risks involved. Millis identifies the primary concerns as, number one, execution risk. Then there's the, extremely unlikely but theoretically possible Bitcoin extinction event, and also counterparty risk. Those are the main sort of cautionary points you need to consider.
Okay, so if we had to boil down Millis's core argument for the smarter web company into like a single compelling takeaway, what would that be? He argues it's one of the fastest growing Bitcoin treasury companies globally, and it's uniquely positioned to capture significant institutional demand for Bitcoin in the UK through compliant vehicles. And this is all underpinned by that substantial Bitcoin yield runway we mentioned, a really robust core business providing stability, and a mission-driven leadership team that seems deeply aligned with shareholders.
And championed by highly respected Bitcoin advocates. It's certainly a lot packed into one investment case, isn't it?
Definitely. Moving beyond just the overview, let's trace the smarter web company's journey a bit, because its evolution is actually quite telling. It was founded way back in 2009 by Andrew Webley, and for, over a decade, they just steadily built a solid reputation in web design, online marketing, accumulating over 250 loyal clients.
The real strategic pivot, I think, comes in 2023. That's when they signal this bold new direction by starting to accept Bitcoin payments. It's a pretty big signal. Then April 2025, they made another significant move, going public on the UK Aquis Exchange. And crucially, in that very same year, they formally adopted a Bitcoin treasury strategy. This timeline is fascinating because it shows a deliberate strategic shift, right? positioning them right at the intersection of their established digital services and this emerging landscape of financial sovereignty.
Exactly. So while their Bitcoin strategy definitely makes the headlines, their core operating business, well, that remains the foundational bedrock. They provide essential services, web design, hosting, digital marketing, mainly to small and medium-sized businesses. This generates, upfront fees for building sites, and then this steady stream of recurring revenue from annual hosting and optional monthly marketing services like SEO, that's search engine optimization, and PPC, pay-per-click advertising. They even have a US division focused on performance-based search engine marketing. This stable, scalable revenue base is, I think, what really supports their more ambitious long-term growth aspirations.
And those stable roots, they come with some pretty impressive numbers. The Smarter Web company boasts a remarkable 15 years of profitability. And get this, in 2024, they achieved an incredible 94% gross margin. That's huge. Their IPO performance, as Millis details it, has been, well, nothing short of explosive. He calls it the best performing UK IPO ever, noting it was the fastest UK IPO to achieve 100x returns, did that in just 51 days. Wow. They're now the largest stock on the Aquis exchange and are highly liquid in both the UK and US markets via the OTCQB. Just for context, Millis calculates they'd need to hit around £9.60 per share to actually surpass ASOS's legendary 300x return. So still some way to go for that record, but incredible performance nonetheless.
Yeah, incredible. And beyond those sort of flashy IPO numbers, Millis emphasizes something perhaps less tangible, but equally powerful, the sheer simplicity of this business model. He sees it aligning with principles like Occam's razor, where the simplest explanation is often the best, and also Sosnoff's law, which kind of suggests that the thinnest research files can often correspond to the best performing assets. Interesting idea. The document firmly positions them as a true first mover in the UK as a public corporate Bitcoin treasury company, placing them squarely in the innovators and early adopters stages of that adoption curve.
Which naturally leads us to, well, an important question. Is now truly the optimal time to invest? Millis argues yes, and he weaves in wisdom from some legendary investors here. He quotes Warren Buffett's observation that most people get interested when everyone else is. The time to be interested is when no one else is. And Howard Marks reminds us that being too far ahead of your time is indistinguishable from being wrong. So this collective wisdom sort of reinforces the idea that strategic patience and acting counter to the crowd can be really critical.
Okay, shifting gears a little to how they actually generate value. The Smarter Web company operates on three main engines for driving shareholder value. There's continued organic growth from their core business, strategic acquisitions, and of course, Bitcoin accumulation.
Right. And to fuel that pretty ambitious Bitcoin strategy, Millis explains they leverage specific capital levers. Primarily, these are accelerated book builds that involves raising capital from institutional investors and also subscription agreements. Now, these agreements, they come with important protective conditions for shareholders. Shares are always priced above the previous day's close, and the volume is capped at 20% of the daily traded volume across all three listings. So it's designed to be flexible, non-hard capped. The document notes they fully utilize their current WRM offering. It's a popular type of tax-efficient investment account in the UK, with a potential reload expected in 2026.
The document also identifies several competitive advantages, or moats as they're often called, that give the Smarter Web company a unique edge. These include a clear first-mover advantage, a powerful flywheel effect, and crucial regulatory access.
Yeah, and what's particularly compelling, I think, is Millis's detailed explanation of that flywheel concept. It's quite neat. It's basically a self-reinforcing cycle. The more capital the Smarter Web company raises, the more Bitcoin it can acquire. Simple enough. But as they accumulate more Bitcoin, it tends to increase Bitcoin's perceived value, which then grows the company's market cap. And a larger market cap, in turn, makes it easier for them to raise even more capital, which lets them buy more Bitcoin and so on. It just keeps reinforcing itself. And that regulatory access edge is really significant because, as the document highlights, UK investors currently lack those direct passive Bitcoin vehicles like ETFs, making the Smarter Web company a unique compliant gateway for them.
Right. So to measure their success and understand their strategic direction, Millis introduces this core mental model, which he calls the Smarter Web company trifecta. This comprises three interconnected drivers: Bitcoin torque, Bitcoin yield, and MNAV, or multiple of net asset value.
And these three, they're intricately linked, mutually reinforcing. To put it simply, Bitcoin torque represents how efficiently they convert invested capital into Bitcoin value. Bitcoin yield, that's the return they generate from their Bitcoin holdings, often through what's called accretive dilution, which basically means the percentage increase in their Bitcoin holdings outweighs the percentage increase in shares outstanding. And MNAV is their market capitalization relative to their net assets. So higher Bitcoin torque, for instance, naturally boosts Bitcoin yield, and that, in turn, can justify a higher MNAV for the company. They really power each other in this kind of synergistic loop.
Okay, so when it comes to actually tracking their progress, the most important key performance indicators, the KPIs outlined in the thesis, are total Bitcoin holdings, multiple of net asset value, MNAV, Bitcoin yield, Bitcoin per share, and Bitcoin torque.
Right, let's quickly define those. Total Bitcoin holdings, pretty straightforward. It's the total Bitcoin the company owns. MNAV, as we mentioned, measures market cap relative to net assets. Bitcoin yield, driven by that accretive dilution. Bitcoin per share is simply total Bitcoin holdings divided by shares outstanding. And Billis points out two key ways to increase it, either by buying Bitcoin when the stock trades at a premium to its NAV, or by buying back shares when it's trading at a discount. Smart. And Bitcoin torque, finally, that measures the value created for every dollar of capital invested. Really reflects the efficiency of their Bitcoin accumulation strategy.
Now let's explore the rich landscape of opportunities Millis identifies for the Smarter Web company. It's quite something. They have this active Bitcoin acquisition strategy with a frankly substantial runway for Bitcoin yield. Their target is incredibly ambitious, acquiring 1% of the total Bitcoin supply. That translates to a staggering 210,000 Bitcoin through a phased approach. That's a bold vision.
It really is. And connecting this to the bigger picture, Millis underscores that this strategy is really propelled by significant, almost desperate demand from UK investors. Both institutions and retail investors seem eager for Bitcoin exposure, but they face limited local options. He points to this massive 1.3 trillion pounds sitting in tax-efficient wrappers like SIPPs and ISAs in the UK. That represents a huge pool of capital that could be directed towards Bitcoin exposure through a compliant vehicle like the Smarter Web company. Plus, you have institutions actively seeking high beta, volatile equities that could potentially outperform the more defensive FTSE 100. And, well, the Smarter Web company seems to fit that profile perfectly.
Yeah, it does. And another intriguing opportunity Millis explores is their potential to dominate the UK fixed income market. Andrew Webley has reportedly explored issuing preferred securities, apparently following conversations with influential figures like Michael Saylor. This is a critical opportunity because, let's face it, the UK fixed income market is currently starved for positive yield. You've got low interest rates, inflation eroding returns. It leaves investors with very few appealing options.
Exactly. And this brings us right back to the foundational power of being a first mover. By establishing themselves early, the Smarter Web company can capture significant investor attention, build that crucial credibility, and accumulate Bitcoin ahead of potential competitors. This proactive approach really solidifies their position as the dominant UK Bitcoin treasury company, making it, much harder for others to catch up.
It's also vital not to overlook their strong core business with organic growth potential. We touched on this earlier. This is a high-margin, recurring revenue stream web design, hosting, digital marketing underpinned by that impressive 15 years of profitability. And Millis makes a fascinating point here. Successful growth in this operating business, especially if it's boosted by strategic acquisitions, essentially acts as a free call option for investors.
A free call option.
Yeah.
Interesting way to put it.
Yeah, offering potential upside that the market might not even be fully appreciating right now.
And beyond the business fundamentals, Millis also highlights the passionate community surrounding the Smarter Web company. Over 3,100 members now. This apparently makes them the third largest Bitcoin treasury company community globally, trailing only Strategy and MetaPlanet. That's significant. This engaged community actively crowdsources information and research, which, truly enhances transparency and fosters this strong sense of market engagement around the company.
Okay, but it's always crucial for any investor to thoroughly examine the potential downsides, right? The risks. Millis is quite direct in identifying what he calls the main risks: execution risk, a Bitcoin extinction event, and counterparty risk.
Yeah, let's unpack those slightly. Execution risk for the Smarter Web company specifically refers to their ability to, successfully raise capital on favorable terms, efficiently deploy that capital into Bitcoin, maintain investor trust, and skillfully navigate the, ever-evolving regulatory landscape. Failure in any of those areas could severely undermine their valuation and credibility. Bitcoin extinction event, though highly improbable, as we said, describes the risk of Bitcoin suffering some kind of existential collapse, which would, of course, likely lead to the company's failure. And counterparty risk is simply the danger of losing access to their Bitcoin holdings due to a custodial failure or perhaps key mismanagement. That would essentially render the whole business model obsolete.
Millis also outlines some other risks, though he deems them to have a low probability. These include broader regulatory risk, capital scaling risk, the challenge of efficiently raising ever larger sums of money. Then there's the intriguing risk of no capital gains tax on Bitcoin in the UK. That could potentially reduce SWC's appeal if investors could just hold Bitcoin directly tax-free. And finally, he mentions keyman risk.
Right, which raises an important question. How does Millis specifically mitigate that keyman risk concerning Andrew Webley? The thesis argues it's actually overstated for two main reasons. First, he contends the Bitcoin strategy itself is remarkably simple to execute. Its elegance means it could theoretically be followed by almost anyone. Second, any successor would be powerfully incentivized to stick to the playbook Webley has meticulously laid out, knowing that significant deviations would likely not be well received by shareholders. He even draws on that Warren Buffett sentiment about investing in businesses so wonderful that an idiot can run them. While Webley's leadership is clearly valued, his absence isn't seen as a major long-term threat to the core strategy itself.
Makes sense. Now, the driving force behind any great company is often its team and culture. Millis delves into the key members here: Andrew Webley, the CEO, Jesse Myers, the Bitcoin strategy consultant, and Tyler Evans, the non-executive director. Webley brings over 25 years of internet and marketing strategy experience. Myers has a strong background in Bitcoin hedge funds and management consulting. His Bitcoin valuation framework was famously adopted by Michael Saylor. And Evans, as co-founder of UTXO Management and BTC Inc., has incredibly deep roots in the Bitcoin ecosystem. He brings invaluable credibility, particularly, I imagine, to crypto-savvy investors.
Absolutely, and it's worth noting Jesse Myers' personal conviction, too. He made a substantial investment, around $970K, into the June 2025 fundraising round, really putting his money where his mouth is. The management team as a whole is characterized as founder-led, a structure that often tends to outperform, and they're described as analytical, frugal, independent, and distinctly long-term oriented.
The tone from the top is always such a critical indicator of culture, isn't it? Jesse Myers describes Andrew Webley as setting an incredible example and a standard that he personally feels compelled to match. This, he believes, is invaluable, especially for a Bitcoin treasury company where shareholder trust is just absolutely paramount. The company culture is clearly strong, often described by those within it as feeling like family, which naturally helps attract and retain top talent, you'd think.
Definitely. And their management's integrity is explicitly highlighted as a cornerstone of the investment thesis. Andrew Webley has this steadfast commitment to never raising capital at a discount. That's a strong stance. And he demonstrates exceptional transparency through regular online engagement, weekly operational updates, and consistent personal share purchases. This level of openness, it really solidifies trust with shareholders and the broader community.
Okay, finally, let's turn to some of the bolder assertions within the thesis, particularly the valuation claims and the personal conviction behind them. Millis doesn't hold back, does he? Stating quite emphatically that the Smarter Web company is a $10 company. Wow.
Yeah, it's a huge number. But what's truly insightful here is how Millis applies probabilistic thinking to the investment. He references thinkers like Philip Tetlock and Dan Gardner on forecasting accuracy, and even Jeff Bezos' philosophy on high-return, low-probability bets. The idea is that if you have, say, a 10% chance of a 100x return, you should take that bet every time. Millis asserts that the risk here is asymmetrical, meaning the potential upside far outweighs the potential downside, and that the company is, in his words, undeservedly cheap, echoing that Warren Buffett sentiment about finding value when others aren't looking.
And Millis doesn't just call it a strong investment. He actually categorizes SWC as a must-own opportunity. That's strong language. He reinforces this with powerful quotes from investment legends. Charlie Munger famously said, "Opportunity doesn't come often, so seize it when it comes." And Warren Buffett's advice to only buy something that you'd be perfectly happy to hold if the market shut down for 10 years is also invoked, suggesting this investment truly fits that demanding criterion for long-term conviction.
And, in a testament to his own thoroughness, Millis personally assesses his understanding of the business and thesis at an 8 out of 10. He believes he possesses a genuine edge. He emphasizes the critical importance of objective evaluation and actively avoiding confirmation bias, reflecting a real commitment to truly understanding the opportunity rather than just confirming his existing beliefs, which is crucial for any analysis.
So what does this all mean then? We've taken a pretty comprehensive deep dive into Chris Millis's ultimate investment thesis for the smarter web company, SWC. We've explored this unique hybrid business rooted in stable digital services, but, aggressively pioneering a Bitcoin treasury strategy driven by experienced leadership and what seems like a very clear vision for growth.
Yeah, and if we connect this to the bigger picture for a moment, this deep dive isn't just about one company, is it? It really illuminates a fascinating model for how traditional businesses can integrate nascent yet potentially powerful financial technologies. It really challenges conventional thinking about value creation and how moats can be built in rapidly evolving markets, especially, at the intersection of established industries and these new frontiers.
Absolutely. So whether you're an investor seeking novel opportunities, maybe a business leader strategizing for the future, or perhaps you're simply curious about the cutting edge of finance and technology, the Smarter Web Company story, as outlined by Millis, certainly offers a compelling case study. Definitely worth examining. And as you consider all we've unpacked today, here's something to perhaps mull over. Given the Smarter Web Company's truly ambitious target of acquiring 1% of the total Bitcoin supply, what are the broader implications for Bitcoin's own price discovery and market capitalization if more public companies globally started adopting similar aggressive treasury strategies? Food for thought,